Master your money, free your future. Welcome to Budget for Life. My name's Jeremy. I'm not a professional YouTuber. I'm a financial advisor. And this video is not financial advice. In this video, I just want to talk about a new announcement from GameStop, a long-term comp plan for Ryan Cohen. I want to share kind of the high level of what this means for GameStop and some ways that it resembles a compensation structure that, at least in my corner of the world, Elon Musk made famous, popularized through his tenure at Tesla. Before I get into it, just want to say thank you to those who have subscribed. Thank you to those who have joined the channel. By the way, one of the perks of joining the channel is that you get access, at least at the friend level, to my firm's client communication. And new video just dropped as far as Q4 recap and kind of my allocation, decision making, investment management matrix for how I'm allocating heading into 2026. So, congrats, thanks. If you want to be a part of that, you're welcome to. Let's get into the comp plan. So, at a high level, if GameStop surpasses a $100 billion market cap, which would be basically an 11x from the 9.26 that it currently sits at, then Ryan Cohen will receive the opportunity to buy stock. So you can see here the total award consists of stock options to purchase 171 million shares at 20.66 per share. This was just announced the morning of Wednesday, January 7th. So that 20.66 price point was just market close on January 6th, right, the day before. So at that price, Ryan Cohen saying, I will buy 171 million shares at that price. He is not being gifted shares. What he's being gifted is the opportunity to buy shares at this price, right? The close of January 6th, 2026. He's being gifted the opportunity to buy shares at this price for many moons to come, even when the current price, hypothetically, is much higher than the price that it was at close January 6th. So, what does this imply as far as Ryan Cohen and his belief in the company? Is he somehow going back on or backtracking on what he's communicated about aligning firm interests, right? Shareholder interests with the board interests, with management interests. Well, it's really like an even more impactful than an insider buy, right? Ryan Cohen could say, I'm going to buy X and release that form this morning of, hey, I just bought these shares. But really he's saying, I want to buy even more, right? I want to buy even more money than I even have right now. What happens if GameStop achieves what it's seeking to achieve? GameStop raises $3.5 billion. $3.5 billion added to GameStop's cash pile over the course of this vesting period. That's just 171.5 million shares times 20.66 a share. It's over $3.5 billion that GameStop raises that Ryan Cohen spends. Why would Ryan Cohen agree to spend an additional $3.5 billion on GameStop stock? Well, because in this scenario, the stock is already worth well more than $3.5 billion. And if he really didn't believe in the stock, which would be shocking at this point, but he could, right, purchase the stock and then sell the stock at the open market, right? He doesn't have to hold them forever, but I would be surprised if he did sell a substantial portion of the shares that he is agreeing to purchase. But ultimately, that's why it's called an award, because he's going to get to buy shares at well under market value. And if he doesn't really covet the shares and he just covets the market value difference, then he can immediately sell the shares that he buys. So that's why it's an award. But even if Ryan Cohen sells the shares that he buys, GameStop will still have raised $3.5 billion in the process. And what also happens is that the share count expands, right? The float dilutes upon these tranches being reached. So, how does this differ from what Elon Musk has done with Tesla? Well, first is that Elon Musk was gifted. I mean, it's hard to call it gifted because there were still market cap thresholds that Tesla had to reach. But if Tesla reached certain thresholds of market value, then Elon Musk would be gifted X amount of shares. In this case, Ryan Cohen is not being technically gifted the shares, but he's being gifted the opportunity to buy shares at below market value. That is the gift, but it is still up to Ryan to purchase the shares, and also up to Ryan to create the market value conditions by which the shares can be purchased. But GameStop's balance sheet actually looked better as a result of it, right? Another $3.5 billion in the bank. And also it's not guaranteed. So what has to happen, right? Which they emphasize. Mr. Cohen receives no guaranteed pay. His compensation is entirely at risk, only accomplished if the company achieves significant market operational goals. This will be voted on by investors in March or April. The meeting has not been set yet, but they highlight some of Ryan Cohen's impact on the stock so far, or really on the company so far. Market cap has gone from 1.3 to 9.3 billion over the past 5 years. SG&A has decreased by almost half, right? A 50% reduction in costs over the past 5 years. And just over $800 million swing in net income from a $381 million fiscal year loss in 2021 to a $422 million profit over the past 4 quarters. And we know that profit is projected to widen in the coming 4 quarters. So obviously, GameStop in a much better position today than at any point ever in its company history. And for all the doubters, right? What is this signal for those who are bearish on GameStop stock? I mean, what it signals is you might not want to be bearish for much longer, right? Ryan Cohen is definitively communicating, and GameStop is definitively communicating through this compensation plan that GameStop is not just a defensive name with a high floor, right? A high cash valuation. You know, they're not just going for hey, we could achieve a 26 PE one day, and if you add that to our, worst case retail valuations, then hey, there might be 10 or 20% upside from here based on GameStop, the legacy retailer. That is this communication, it's not the nail in the coffin to that bear thesis because obviously GameStop still has to execute, but it is a very clear signal. If the warrant issuance wasn't a clear enough signal, right? The warrants, which GameStop issued as a dividend to shareholders, only create intrinsic value if GameStop is above $32 a share 10 months from now. If that wasn't signal enough, GameStop is signaling even more strongly here that they see extreme upside in the stock, greater than $100 billion valuation, which is crazy because, as I've been communicating for months, the upside is well in excess of $100 billion valuation, right? So GameStop saying, hey, the bull case is the case that we are on a mission to accomplish. But it's not just a, hey, the stock could squeeze and Ryan Cohen's going to be able to take advantage of the opportunity. It's also the company has to perform, right? It's not just if we squeeze to $100 billion, then Ryan Cohen gets these stock options for 171 million shares worth. It's also EBITDA continuing to perform well. I'm assuming that these EBITDA calculations will begin once this is approved, right? Although the board reached an agreement with Mr. Cohen on January 6th, its effectiveness is subject to approval. Okay, so maybe it's starting on January 6th, assuming it is approved as far as the EBITDA calculation. So effectively, Q4 numbers, which are, conclude on January 31st or really February 2nd, whatever that first Saturday is, that are reported at the end of March, I'm assuming that that will be the first EBITDA threshold for this cumulative performance, which means that it'll probably take several quarters, right, before ultimately these market cap tranches or before the EBITDA tranches establish. Unless they're on just a trailing 12-month basis, they haven't like super made clear how they're calculating cumulative performance EBITDA. That cumulative obviously means that it stacks over time. The question is, when does it start? It could start from 5 years ago, right? I mean, historically, there is no EBITDA, right? The legacy GameStop is net income negative and operating income negative and EBITDA negative. So perhaps the calculation begins at the beginning of 2025, right? As soon as there actually is EBITDA, that's already being factored into the cumulative EBITDA threshold. Or maybe it's being calculated based on the beginning of his tenure, right? In 2021, or when he became CEO in 2023. Yeah. We will see. Regardless, this not only raises 3.5 billion more in GameStop if they achieve these goals, most importantly, it communicates that GameStop sees at least an 11 times upside, right? A 1,100% return is what they see as possible. And of course, that they see themselves being continually increasingly profitable as well, right? Not just squeezing the stock, but genuinely having fundamentals to support the valuation. Ryan Cohen maintains his risk on position, right? Technically, even though he's being awarded the options, right? He's being awarded the opportunity to buy them below market. He is still the one buying the shares, right? And we'll see how many of those shares he ends up holding. I imagine the vast majority of them. And lastly, this indicates perhaps that GameStop is not necessarily interested in additional dilutions from this point. It's not necessarily the case. They still may want to dilute, but basically they are baking in another $171 million dilution over the span of these market cap accomplishments. And so is that dilution in light of these market cap goals kind of a signal that, hey, rather than as our market cap increases, you being as an investor worried about GameStop selling additional shares, perhaps this is their way to go ahead and get the coming dilution out of the way, get that communicated now on the front end that, hey, this much more dilution is coming, right? That ultimately will put the float at 650 plus that 170, right? So at 821 million share float, right? That extra 170 is coming. Does that mean that that is the dilution that they hope to do over the period of this 11x? Or is this just one piece of the pie and they will actually continue to dilute in other ways as well? Certainly interesting to think about. Not that important ultimately. If they do dilute further, it doesn't affect the market cap directly, right? The share price will come down, but the market cap will still reflect the total shares times the share count. However, the value of Ryan Cohen's stock option is tied to the share price. So it's in Ryan Cohen's best interest to not dilute any further, right? It's in Ryan Cohen's best interest for this to be the final dilution for the foreseeable future for GameStop because he's paid on a per share basis. His options on a per share basis. It does not adjust for future dilutions. So if they were to do a stock split, for example, I mean, I'm sure in that case, a literal stock split, perhaps this compensation award would be able to adjust accordingly. But an at the money offering or a convertible bond, I do not see a likelihood that his option plan is adjusted accordingly to any other future dilutions. For example, right, the convertible bonds and the warrants that have already been communicated, there's 200 million shares of dilution that we know will come that hasn't come yet. I do not think that this stock award is going to basically increase by almost 50% just because of those dilutions. I don't think this 2066 per share is malleable. All that to say, if GameStop is done diluting, all it really means is the conditions become more plausible for ultimately a squeeze to the upside on the stock if they're done diluting, which it's officially in Ryan Cohen's best interest for them to be done diluting, which is very exciting. Regardless, $100 billion is where GameStop hopes to be. How many years does it take to get there? Time will tell. Will they ever get there? Time will tell, right? This isn't a guarantee, right? But it is a very strong signal, particularly when you have 1.7 billion on the way at 32 a share, right? Right on the other side of this 20 billion tranche, right? This first and second tranche. Right on the other side of this tranche one is a warrant dilution. Right on the other side of this tranche is the convertibles diluting, which is another 4.2 billion in the bank, 1.7 billion in the bank. And before you even get to tranche two, there's S&P 500 eligibility. And so all of those as massive tailwinds combined with the tailwind that is this very compensation package, right? Once that S&P 500 trigger is hit and oh, we're squeezing, quote unquote, squeezing from 30 to 50, for example. Well, GameStop has already publicly communicated, right? This is on their website, their investor relations, that they see upside towards at least 100 billion, right? So it raises the ceiling of how high of a valuation GameStop ultimately could justify, and it's a very strong signal to investors. Very exciting times for the stock, the fundamentals, right? A lot of hard work was done in 2025 and 2024 to get the fundamentals to the point where a compensation plan like this makes sense. They had to do the dirty work first, but now that they have, they truly seem primed for an incredible upside move. So, excited to be a part of it with you guys. That's all I got for you today. I will see you in the next one.